everyone, welcome to the XRP market analysis for April 24th, 2026. You know what I've noticed? The market's been giving us some really interesting signals today. So let's dive right in and see what's happening. Oh, before we start, this video is based on an AI-generated report, so please use it as reference only. And remember, investing is always your own responsibility. I'm just someone looking at the data with you. All right, let's talk numbers. XRP is sitting at $1.4385 right now, with a modest plus 0.77% gain in the last 24 hours. Not bad, right? The trading volume is quite healthy at 91.72 million XRP, which tells me people are definitely paying attention. Here's the thing. The price is consolidating between $1.4410 and $1.4090, and that usually means we're at a critical point where the market's deciding which way to go next. Now this is interesting. The technical indicators are painting a pretty clear picture. The RSI is at 56.00, which is right in that sweet neutral zone. Not too hot, not too cold, just right. The MACD at 0.0163 is sitting nicely above its signal line, and that positive histogram? That's showing us sustained upward momentum. XRP is trading above the Bollinger Band middle line at $1.3777, moving toward that upper band at $1.4708. But here's what caught my eye. We're still about 23% below that 200-day moving average, so there's definitely some resistance to work through. Well, the global situation is getting a bit complicated. Those Middle Eastern tensions are making the dollar stronger, and you know what that means for crypto, right? XRP has a negative correlation with the dollar index, so when the dollar goes up, XRP tends to feel some pressure. The correlation with the S&P 500 is pretty weak, but there's a slight positive connection to the Nasdaq, which makes sense given the tech influence on crypto markets. Here's where things get a bit mixed. Mark Yusko from Morgan Creek Capital is expressing some skepticism about Ripple Bank's prospects, which isn't great news. But wait, on the flip side, there's positive analysis suggesting XRP could play a major role in decentralized finance. The XRP ETFs are seeing outflows though, with XXRP showing the largest at -$6.9 million. That's concerning for institutional sentiment in the short term. The Fear and Greed Index is at 46 right now, which is perfectly neutral. No extreme fear, no crazy greed, just balanced market conditions. XRP search trends are sitting at 22, which is relatively low, and that FOMO spread? 0. You know what I've noticed? Sometimes the best opportunities come when everyone's not paying attention yet. Now this is where it gets exciting. We had 925 daily transactions with a massive 2.36 trillion XRP in total volume. But here's the kicker. 309 whale transactions accounting for most of that volume. That's huge whale activity. And when I see whales accumulating like this, well, they usually know something we don't. Reports are saying XRP topped $1.43 as whale demand surged. That's a pretty strong signal. From an Elliott wave perspective, we're looking at wave C in a corrective phase. The Wyckoff analysis shows we're in accumulation phase A with 33% confidence. Now, phase A is when the smart money quietly collects assets at lower prices, which totally matches what we're seeing with all that whale activity. Once this accumulation phase wraps up, we could see a nice markup phase coming. Okay, here's what the AI is predicting, and it's quite interesting. Short term, we're looking at $1.5494 in one day. That's a 7.7% jump with 51.5% probability. But wait, it gets better. The 7-day prediction is targeting $1.9369, which would be a massive 34.7% gain with 64.1% probability. That's pretty bullish. However, the 30-day prediction moderates back down to $1.5211. so we might see a strong rally followed by some cooling off. Now, let's be realistic about the risks here. Those Middle East tensions could keep pushing the dollar higher, which isn't great for XRP. The ETF outflows are a bit worrying for institutional sentiment. Fed policy uncertainty could shake things up, and we still have that technical resistance from being so far below the 200-day average. Plus, search interest is still pretty low, which means we might not have enough momentum from retail investors yet. All right, here's my take on all this data. I'm seeing a conditional short-term buy signal. Why? Well, those whale accumulation patterns are hard to ignore. 309 whale transactions don't lie. Plus that AI medium-term target of $1.9369 with 64% probability, that's compelling. The technicals are showing upward momentum too. So here's what I'm thinking. Entry range between $1.42 and $1.44. First target at $1.55. Second target at $1.85. But definitely set that stop loss at $1.35 below the Bollinger Middle Band. And if those geopolitical risks escalate, get out immediately, no questions asked. And that's it for today's analysis. The whales are accumulating, the AI is bullish for the medium term, but we need to stay smart about those risks. If this was helpful, please subscribe and hit that like button. See you next time, and happy trading, everyone.